What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. So if that sounds like something you're interested in, consider subscribing, as I do also provide a weekly analysis on charts to give you some of the supply and demand zones that I am watching. And I also do provide a daily pulse on the market on X at Hemi137. So that way you're most up to date on the information I am looking at and what I am watching. So, before we get started, remember to go ahead and drop a like and let's roll right into this because this week is going to be a very, very busy week. Despite over the past 2 weekends, not just alone the weeks, but the 2 weekends, we had some major, major stuff going on with an assassination attempt. And then also, we just had Biden essentially step down and endorse Harris for president. So, that being said, will be interesting to see what happens over the weekend. Again, all this will influence how policy will be implemented in February. So just keep that in mind. A lot of the market will move off of what's currently going on. And given what's been going on, the market's been selling off because there's a lot of chaos happening right now. And that is the uncertainty. You draws a lot of fear in the market. So you need to keep that in mind. And when you start talking about a lot of things that occur domestically, that affects the stock market. And so you should be well aware of that. So, with that being said, let's go ahead and dive in over the last week, and then we'll get into this big week we got coming up. So, over the past week, we had a core PCE inflation fall to 2.5 in line with expectations of 2.5. Again, the sticky inflation is going to continue. Powell has even talked about this bleeding well into 26. So do keep that in mind. That will finally hit that 2%. I think it will be much higher than that. And again, they revise reports and manipulate reports to make it look like it's better than it actually is. It isn't much better than it has been, although it is starting to come down to some extent. We still have very high inflation. It's forcing a lot of people out of their homes. And again, the Fed are going to want to keep interest rates high until housing starts correcting. Now, again, with everything that's been going on, you have to understand that housing there's still some very high average sales for homes. But with that being said, 1 in 5 U.S. homes for sale had a price cut in June. So now we're starting to see more supply. And this is essentially what causes a housing market crash is you start getting more supply, and all these people that are price gouging right now will realize that they can't get this massive equity that's been building up over the past 3 years, that if they then sold in the past year or two or 3 years, that they're going to lose all that. And the problem is a lot of people are taking home line equities of credit against their home. The problem with that being is if your equity starts declining, which is going to start doing, which there's a lot of supply, you're going to be wrapped and be underwater under your home because you took out that line of credit. And then also understand homes, 102,000 completed and unsold homes on the market. That's the highest it's been since 2008. And we've talked about this going even into the banking crisis, that essentially the numbers we are seeing over the just couple of banks that have failed have been massive compared to that of the 2008 crisis. Now, given we've printed a lot of money and the dollar has lost a lot of buying power, so that does add into that equation. But ultimately understand things are still in very, very bad shape despite what is being displayed out there. The prices are way too high and they need to come down to be more affordable for people. And so we are waiting for that correction. And we're starting to see that. And you're seeing that reflected highly in areas like a lot of places in Texas and in Florida, and a lot of places in Colorado are probably the 3 states that are leading in that the decline as of right now. California has been in that decline, but that's amongst other things that are going on in California as well, with the state taxes that are getting extraordinarily high that people can't even afford to be there, and then insurance on top of that is surpassing not only HOA and some even mortgages. It's causing people to have to sell and move. And so this is the problem, and this is what you see every single cycle is they'll do whatever it takes to force people to have to sell, and that's the way our system works. And so despite you want to think it's a conspiracy theory, it's underlying the debt-based system in the banks, and this is what they do. When they need the economy to do something, they make changes and they force people to have to make it look like it's something else when in fact it's not. It's been a lot of issues previous because of the 40% printing of the money supply and the debt-based system, and understand that the 40% print is really what is accelerating and making this a lot worse than what it was. So with that being said, Kamala, over the past week, we've also had Kamala Harris endorsements for president. We've talked about this. Again, you live in a democracy. She should have been voted in. She never was. She's just being endorsed. So just keep that in mind. Again, not trying to make this political, but you have to understand that it's all a ploy either way. I've always been neutral about politics, and I believe both sides try to divide, and that's what you're seeing. And it's getting worse and worse as time progresses, especially during election year. So we'll see what happens moving forward. Being said, we had a lot of earnings this week. Again, we had some good earnings. We got a lot of insight into banks. Banks, again, looking extremely weak. Again, even the small banks, they've been bailing out small banks. So any bank, given the size, they don't care. At this point, there's no debt ceiling, so they're out there free spending to save banks to make it look like this essentially president is holding up the market, when in fact it's all the massive amount of spending that's going on behind closed doors to bills that make no sense, to prop up the market, to support the GDP numbers, to support non-farms, to support all these things that again are being pencil whipped to make you believe that you're in one of the strongest economies ever, when in fact you are not. And a lot of people could probably tell you that working 2 full-time jobs. And so with that being said, earnings over the past week. Tesla, we've had the revenues up 9% year over year. Energy profits are at all-time highs. Energy is flying up for Tesla. Again, despite that, there's a lot of still worry and concern about cars, obviously. They still missed on some things, but ultimately understand that they're turning around. They missed on the last earnings and they went up because of the forward projection of what's going on with FSD and where that is. And I do believe Tesla, it will be leading the whole pack coming out of this with FSD and humanoids. So there are some positive signs there, but ultimately understand, yes, in the short term, it still will get hit. It's not a car company; it is a technology company, and people are starting to kind of see that. You're hearing whispers and some analysis actually planting seeds of that. Despite this whole EV push for them, we also had Google earnings. They met expectations but missed on YouTube ad revenue. And then also announced this week was OpenAI's essentially new search engine competition for Google. So again, we were worried about this for since last earnings, and they finally announced it this earnings. So Google has been in really bad shape, and again, they're getting in that same position as Apple. They need to figure something out because that's highly concerning. And again, to reflect, YouTube ad revenue, that tells you where businesses are. And that's a very important aspect to be paying attention to, because if ad revenue was down, that means businesses can't sell anything, or there's a lot of businesses going under, or that's one of the things they start cutting is marketing, because again, they can't afford to do that because it costs a lot of money to market. So that is very important. And Ford posted the worst daily performance since 2008 with an 18% correction on it. Again, cars are doing horribly bad. There was a massive push for EVs just 3 years ago, and they were essentially front running it with Ford and GMC and a bunch of these other domestic car producers, and understand that, again, they try to play catch up to Tesla. Tesla was just too far ahead of everybody, and understand that it hurt them, it set them back. And so they started running back to gas, and then understand that even with the combustible engines, they're struggling because nobody can afford $100,000 trucks at this point. So, and understand that all that liquidity has been pulled out. Now nobody has excess money. And now you're having all these lots for the past year and continuing to grow as interest rates are high. And it's a bad market to be buying or to be selling in, because right now people they can't get loans. They don't have excess cash. You're seeing that in McDonald's earnings. You're seeing that in Starbucks earnings. You're seeing that across the board. And understand the cheap cheap entertainment and Netflix. That's where people in binging, and this is why Walmart is doing so well, because people binge on food and cheap entertainment like Netflix and cheaper things. And so understand that's why you're starting to see that surge in those particular areas, and also why you get inflation on certain things, because people look for the cheaper things. But once it gets, let's say, oversaturated, they start increasing the price because of the high demand. So this is why inflation shifts around a lot to cheaper entertainment and stuff. So again, a lot of big stuff. Probably missed a lot of stuff as well. There's just so much going on. This week isn't going to be any different. This week is going to be massive. This is like the Super Bowl week of earnings. You will get that between this week and next week. There's going to be a lot of information that's not even depicting what could potentially happen over this weekend, especially with all the tension with the election. There's a lot going on, and you have to keep that in mind. So with all that going on this week, we do have the FOMC interest rate decision at 2 p.m. on Wednesday. Again, not expecting anything, but there is a lot of people are putting 100% chance that they will cut next, essentially on the next FOMC interest rate decision. The thing with that is again, it's going to be more of a reactionary thing and not just we're going to cut. And now they're talking about potentially 50-point basis move, what makes me think that they're going to start cutting sooner than that. It's not going to be scheduled, but what will be interesting is we do have Powell at 2:30 Eastern Standard Time on Wednesday. Will give us more of a breath of where they're at and kind of trying to understand. Now, he's been very general about the information that comes out. He doesn't want to show his hand because he knows if he does show any slight of his hand, what's going to happen is the market moves off of that and they interpret whatever he says. So he tries to be very generic about the information that he gives and says, yeah, we're going to rely on reports, blah, blah, blah. Again, he's even pointed out that the non-farms have been off, but yet being said, things are bad and accelerating at a rapid rate. And what we're seeing is even on the revisions is unemployment is skyrocketing. There's been plenty of articles out there as well, is that people can't, after losing a job, it's extremely hard to even find a new job. So you've got a lot of these things currently going on as of right now. So that is what the concerning thing is. And on Friday, we do have new non-farms. Again, is a very, very big week once we start looking down at these expectations on options for this week or expected moves this week. You'll see they've priced in a lot this week on the index and on individual stocks. A lot of the industry leaders, they have priced in a ton because it is a big, big week. So the biggest thing is to either one, let your stock report earnings or just play shares this week, because options are going to be so out of whack and they're going to price so much in. And you'll see when we scroll down here that it's absolutely absurd. So upcoming events and pivots, obviously monetary policy on the 31st. New core inflation is until August. And then again, we aren't getting any of the projections on this monetary policy. That will be on the next one in September. That's the September 18th is the one they are projecting that we should get like a 50% basis move cut. We'll see. There's a rumor saying that there might be some really aggressive cuts after that. It wouldn't surprise me because a lot of stuff is already falling apart. We're seeing that in this presidential race. We're seeing all kinds of information already happening, and that again, it's all comes at one time. They essentially unleash it in waves, and so they do it when you have earnings to try to oversaturate the information so you miss some details and some really important details. And that's why I always point these out on every earnings cycle, because you need to really be paying attention. For upcoming earnings, obviously, we're going to go over Earnings Whispers calendar here and kind of point over the ones I'm really watching. Now, expected moves, these are crazy. The SPX is back up to 104, which it is really, really high. 100-point move on SPX is massive, but given that you have Powell, given you have non-farms, given you have a lot of the big earnings this week could move massively, and we've already been selling off massively. And typically the market pushes up during this particular time, and right now it's been selling heavily, which is very, very concerning. You've had a lot of CEOs have been selling to this point too. So again, something to be watching. Tesla is still very high at 13. Given Tesla kind of trades, is getting closer to where it trades around. It was higher, I believe it was at 18, maybe even 20, I think, for its earnings. Boeing is still high at 10. JP Morgan is kind of sitting at 5, so it's kind of evening out because there's not really a lot of big banking news. There could potentially be. That's something you have to keep in mind is the banking crisis is not over. It is very healthy and out there, and they're bailing out banks without letting people know, or there's very small news articles about what's actually being reported. Again, you have to understand they've been stopping a lot of these reports from coming out. The VA had so many delinquencies on their home that they stopped reporting. They just completely stopped reporting. That's what you need to understand. So the only actually information that you are getting is coming directly from the administration, and they keep it very generic, saying it's one of the best economies ever. What it is not. You have a lot of people second guessing if it's just them that's having a hard time, and that's not true. It's the whole economy in general is suffering and suffering very badly. So, with that being said, earnings, big week on deck. This is one of my favorite times is these massive earnings because you get tons of information on what's actually going on, not all the hoopla that gets reported. You get to, and this is why I point out certain earnings, and that's what I do every time around earnings is I go through these calendars and I pick out specific ones that I'm really watching and give detail as to why I'm watching them, because that's extremely important on knowing essentially the health of the market and where it's going, and then also watching as far as like technical wise, really watching some of these to potentially start dumping pretty heavy and correcting because the Mag 7 has just been absolutely parabolic for a while. So let's get into this. So obviously on Monday morning, we're going to open up with McDonald's, and McDonald's have been hurting. And we've talked about essentially what was going on with Starbucks, and Starbucks reports again on Tuesday night. These two will be really important for excess money. You want to see, and we saw Domino's reported the week before, they did horribly bad. Fast food is getting too expensive. People just cannot afford it. And if inflation is defeated, why are these prices so high? And that is the problem, is that inflation is not gone. It is extremely high, and people can't afford to pay an extra, $5-6 on their meals when essentially inflation is, your housing or gas or, automobile insurance is skyrocketing. So you're paying all that excess cash out. So you have no excess cash to be shopping for these things. So very important to be watching that to see where the consumer is come Monday morning. Tilray is always a good one. Sprouts could be a good one to give you a pulse as people are going into more cheaper markets like Walmart, general store brands. And then Tuesday, big day. You got SoFi as a huge potential bank play, financial play, tech play as well. Big fintech company. But again, if banks start going down, that's the big concern with SoFi. PayPal in that same bucket. Be a big one to be watching. I do really like PayPal once the market starts turning around. And then you got BP, Pfizer, some good ones to watch. And then after hours, you got AMD, obviously. That's going to be a big, any chip play is going to be big. If they announce any kind of new chips, trying to be more competitive. Again, NVIDIA owns that space. Tesla even came out as well over the past week and talked about how they're going to essentially generate a chip that's going to be competitive. And they need to, because if they're generating humanoids, they need to be able to create their own essentially hardware to be able to do that. And if you're essentially outsourcing that could be a huge problem in the future. So and then you have Microsoft, which again, OpenAI is going to be huge, watching them to see what happens there. Starbucks, obviously they got absolutely slammed on the last earnings, so it'll be interesting to see where they're at. And again, Boeing, with all their plane stuff going on, they were supposed to be, I think, a government takeover at some point. Maybe they announce it on this earnings. That'd be interesting to watch and see what happens with that. Again, there's a lot of these lower ones. MasterCard will be really good to be watching to see where the delinquencies are on people's statements. That will be really interesting to watch. Obviously, you have Meta. I think they could do very well. Again, they're massively, I think, undervalued. Even despite, I'm not a huge Zuckerberg fan, but nonetheless, Meta is doing amazing things out there. So even despite if you like the CEO or not, they're still doing very well. ARMS could be a very big one, especially with NVIDIA, that will have influence. So will Qualcomm on chip plays. Lam Research would be a big one on chip plays. You need to be watching those. Obviously, you have JetBlue. You have a lot of these. It's just this week is so overwhelming with earnings. Then Madeira, you want to watch that one potentially. Crocs could take a massive hit because of consumer health. Sirius XM, that may be a hit because Spotify had a really good earnings. They may actually do well. Cheap entertainment, so you might want to watch that one for cheap entertainment. And then Amazon, obviously, I think more people will shop there because if they can save on gas, I think Amazon will do very well. Apple, again, horrible earnings, but yet all-time highs. So it'd be interesting to watch that. So I think that's why they paired these two together because Amazon's been doing very well. Apple has not. And then you have Intel. So you got a big concern there with chips and obviously Coinbase with the massive concern about the dollar. I think Coinbase is about a lot of influx of into crypto. Going to see DraftKings do very well during times like this. People are going to gamble. And so DraftKings is going to be big. Roku could potentially be really big because of Netflix. So just keep that in mind. And then we have a lot of gas on Friday. That always typically does pretty good. If commodities really start selling off, that could be concerning. If you got commodities, gold, and everything else selling off, financials, all industries selling off, when everything sells off together, that is a huge, huge red flag. One thing I didn't point out here is Lemonade. This is one I kind of want to keep an eye on. A little concerning though, because one thing I used to like about them is they were AI driven, but then they started using a third party to kind of do some of their essentially loans. So that was kind of driving away from it till they can start recouping some losses before they start implementing, I guess, full AI to some of this. Again, you have to understand AI takes up a lot of resources. You got to have a lot of bandwidth, and that again come at a cost to be able to supply that. So again, we'll see what happens there. But again, there's a crazy, crazy amount of earnings this week. So you really, really have to be careful. Again, that's not to mention if anything happens over the weekend that could essentially drag throughout the week, plus all the big events going on, plus all the big earnings going on. It will be a massive, massive week. So just be prepared and get ready to read headline news because this week is going to have tons and tons of information, really good information that's going to really depict where we're going to be heading and when that rate cut's going to happen. Again, you're still seeing massive, massive issues with rates and them being high and inflation being high. Again, these companies can't afford these high interest rates to get new loans to produce more or to keep people employed. You're probably going to see a lot of unemployment, even despite Friday's numbers are going to say that we're have all these massive growth, which again is not true. So with all that being said, if you have made it this far, I know this video is a little bit shorter. There is a lot of stuff going on. You definitely want to be tapped in. You can check me out at Hemi137. Try to touch base on all the big headline news that's coming out. Looking at, again, stock analysis. I'll look at that tomorrow. Go over some charts. Things are still a little too high. Tesla's correcting again, which is great because I think that's going to be one of the interesting companies coming out of this. There's a lot of good value if you want value. That's not where I typically lie, but there's some really great value buys right now. So just keep that in mind as well. So with all that being said, if you have made it this far, go ahead and drop a like. And until next time, I'll see you guys later.